Welcome back, everybody. Thank you so much for joining us. My name is Miranda Drexler. I'm a real estate agent with the Zahnd Team Real Estate Advisors, and today
I'm Kaitlyn Vickery. I'm a mortgage agent with Key Mortgage Partners with Mortgage Intelligence.
So today we're going to be covering a topic that has recently been identified as something that most of Canadians are very illiterate in, and that is mortgages and financing for homes. So what we're going to be looking at are the key points and what you need to know to get started and to actually understand what's in your mortgage. So first thing we're going to start off with is, what is the difference between going to your bank and going to your mortgage broker for financing?
So the big difference between a bank and a broker is that the banks only have access to their minimal products, whereas I have access to about 72 different lenders who all have their own different products. So I have the ability to see all of their terms and conditions and rates and everything that comes with the mortgage from all of them rather than just one institution.
Right. Okay. So instead of going to one and getting one yes or no, you can do one check and come back with a bunch of different options.
Absolutely. Yeah.
Okay, awesome. So that's great. As a real estate agent, I've had lots of different experiences helping clients who have gone with banks and with mortgage brokers. And I will honestly tell you from experience, the smoothest deals have typically been through mortgage brokers rather than banks, as brokers are there to work for you, where people at the bank are sometimes there to kind of check in and clock out, and they might not necessarily understand or work at the urgency of your deal and, getting those financing conditions done quickly.
Absolutely. Yeah, they work for the bank, whereas a mortgage broker, we work for our clients.
Exactly. So big difference there. Okay. Is there any cost to working with a broker?
No. So the only time that I ever charge a broker fee is in extreme circumstances when you are in need of private funds.
Okay. So if you don't qualify for, main A, B lenders and you have to go private, that's the only time.
Yes, exactly.
Okay. Gotcha. All right. So what about rates? Is shopping rates and getting the best rate possible the most important thing?
No, definitely not. I think that a lot of people think that it is, because that's pretty well the only thing that people know about their mortgage is that they have a rate with their mortgage. When it comes to shopping around for a mortgage, you need to consider a lot of other things like the terms and conditions of the mortgage, the length and the amortization, whether or not you have prepayment privileges, all things that we're going to talk about today.
All right, so let's dive into those. So can you tell me what is the term?
So the term of your mortgage is typically 5 years, anywhere between 1 to 5 years.
Okay.
And that is the duration that you are locked into that certain rate. So if you have a rate of 2.79, you'll have that for the duration of the term, so anywhere between 1 to 5 years.
That's the term, how long you're kind of locked in with those terms and conditions and rates. What's the difference between that and your amortization?
So the amortization of your mortgage is the duration that you'll be holding the debt. So if your amortization is 25 years, that's how long it's going to take you to pay off that debt. Whereas the term is the duration that you hold the mortgage rate at what it is, and then at the end of that term, you can renegotiate. So the next 5 years, renegotiate until you're all out of mortgage.
Okay, gotcha. That makes a lot more sense. Because I think a lot of people know it's going to be about a 5-year term, but they don't know what the amortization means. If it's going to be 30 years typically?
25 years.
25?
Yep.
Okay. So now we know the difference between term and amortization. So one thing you mentioned earlier is the prepayment privileges. What does that mean?
So when you get a mortgage, you have the ability to pay off lump sums of your mortgage. Usually that's about a 20/20 prepayment privilege. So that means every calendar year you have the ability to pay up to 20% of the original mortgage amount.
Okay, very cool. All right, and here's another good one. What about payout penalties? So one thing that I look at when I am helping people find a home is how long they're going to hold it for. So how long you're going to keep it before you sell it and move on, whether it's going to be a short-term hold or a long-term hold. And I use that to kind of gauge where we're going to go in terms of value on the property. But what about payout penalties? What are those, and how is that affected by how long they're going to keep the property and what should they be looking for?
Absolutely. So payout penalties, that is the penalty that you'll be paying to be discharged from the mortgage.
Okay.
So a lot of the time, mortgage lenders will use interest rate differential or 3 months of interest payments. So it's really important before you go into your mortgage, if you know that you're only going to be there for 3 years, to really look at the payout penalties. So if you're in a mortgage for a 5-year term and you know you're going to leave in 3 years, you either need to adjust your term or really look at that penalties, because that could be a really big hit. And it all depends, it all differs between each lender. So if you go with one lender and you break at the 3 years, you could be looking at $15,000 compared to the exact same mortgage at a different lender and it being $3,000.
Right. Okay. So essentially, you've got to do some planning, and having a professional help you would be the most ideal situation, so that you can understand. So say you are going to go less than the average term length, really break down the numbers about what is the rate difference going to cost you versus the payout penalty, to make sure that when you are ready to break early, if that's your plan going into it, that you're going to have the least money lost.
Absolutely.
Yeah. Okay, that's good to know. So here's a great question. A lot of people always ask is, do you go variable or fixed rate? What are the difference between the two?
Absolutely. So in a fixed rate mortgage, that term that we talked about before, you will have that fixed rate for the duration of the term. At the end of the term, you can renegotiate. So if it's anywhere between 1 to 5 years on average, you will renegotiate every 5 years. So with a variable rate mortgage, it's based on the Bank of Canada prime rate. So right now it's at 3.95, and variable rate mortgages is prime minus a number. So if it's prime minus 1 or prime minus 105, your rate will be 2.9 or 2.95.
Okay, gotcha. What would you say is better to go with, fixed or variable?
They both have their pros and cons. With fixed rate mortgage, you're locked into that rate. So if rates were to drop, you can't necessarily just switch out. Whereas with variable, when the rate drops, so does your mortgage. But then if the rates were to rise, so would your mortgage rate. Okay. Another thing about variable rate mortgages that I like about them is if I have a client that doesn't know how long they're going to be in the property, if you do a variable rate mortgage, your payout penalty will be at 3 months of interest. So if you looked at the amortization schedule and you saw the interest payments, you count 1, 2, 3, and that would be your penalty.
Gotcha. Okay, awesome. So kind of the difference there is with fixed, you know exactly what your payments are going to be for the whole term, whereas with variable, it could go up or it could go down, but you're left with those changes that could happen. So the reliability on how much you're going to be paying each month is going to differ between the two.
Absolutely. It all depends on the time of the year that you get the mortgage and what the market is doing. So and your personal preference. It's all based on your aversion to risk.
Exactly, in your whole situation. So that's why we're here. We're here to help you out, understand what your goals are, and then finding a solution to help you get in there and making sure that your whole plan, not just right now, but your future plan is going to work out for what you need and what your goals are. So we hope that this was helpful, that you got some tips here. If you have any questions, hop in the comments below and we'll get back to you. If you want to follow us, you can follow myself, Miranda Drexler. So Instagram at Miranda Drexler.
And I am Instagram at Kaitlyn Vickery.mortgagebroker.
Awesome. So thanks so much, and we'll see you in the next video.